Hey everyone, Paul Clark here, and in this video I want to walk through how a $100 bill can make you a better investor. And by that I don't mean how you can actually spend this $100 bill to buy additional stock. That's not what I have in mind, but I think thinking about the value of this $100 bill and how you would treat the value of this $100 bill can help you invest better. It can help you invest with less fear, which will ultimately help you navigate emotionally some of these really red days like today. So looking at October 28th, you had the Dow Jones, the S&P 500, the Nasdaq were all down by over 3%. If you have any kind of meaningful money invested in the stock market, your net worth likely took a hit today, and that never feels good. But so with that in mind, and understanding that one of the biggest challenges that we have as investors is overcoming some of the psychological barriers and some of the fear that can take over when you watch your stock portfolio go down. You know, there's a little voice that pops up in your head that says, hey, sell before it goes to zero, sell before, I know it's going to go down another 10, 20%, I'll buy back then. There's that voice that comes in, and what happens is we ultimately end up selling at the wrong price point a lot of the time, or that's certainly a trap that's out there that we have to be aware of, okay? So how does that get back to our $100 bill that we're talking about? My friend Ben down there is getting lonely. He wants to come back into the conversation. So think about it this way. I'd like you to think, if you had the opportunity to buy this $100 bill, and not from me, but from a bank, you had a credible source where it's not going to be, a fake, it's going to be a credible $100 bill. There's no question about that. Let's just make that leap of faith with that right now. If you were able to buy that $100 bill for $80, would you want to make the deal? Okay? And I think you would want to make the deal. I don't just think you would want to make the deal. I think you'd be excited to do it. You'd be saying, hey, I'm getting $100 worth of value. I only had to pay $80, right? I mean, that's a no-brainer. Of course I want to do that. In fact, I don't just want to do it. I want to do it as many times as they can do it for, right? So if the bank wants to give me 5 $100 bills for $80, I'll buy all 5 if I've got the capital to do so. If they want to sell me 1,000 for $80, I'll buy all 1,000, as long as I've got the capital to do so. I think you'd be excited about it. But now let me ask you, you make that deal. Let's say you buy, 5 $100 bills for $80 from your bank. And then the following week, you go into your bank and they say, hey, welcome back. Hey, did you like that $100 bill for $80? That was a pretty good deal, right? And now they say, hey, we have the same $100 bill, but this week we're going to give it to you for $60 instead of the $80 you paid last week. Now, what would you be thinking to yourself? Would you be thinking, oh man, I can't believe that I, bought all those $100 bills at $80 when I could have been buying them at $60? Is that what you would tell yourself? Or would you just continue to be excited and buy them at $60 because you know the value is $100? I'm guessing that you're going to continue to buy them and be excited. And let's say again, same pattern holds up the following week. You go back in and they're offering you the $100 bill for a half off special. Hey, it's now only going to take you $50 to get the $100 bill. I bet you're still going to want to buy more. Okay? Now, again, how does this relate back to investing? Well, in the case of the $100 bill, what you had there was absolute certainty about the worth of the $100 bill. You know the $100 bill is worth $100, okay? You know getting it for $80 is a no-brainer. You know you're getting $20 of value, and you know as you're offered that at lesser amounts, you're getting more and more value on those deals. My challenge to you is, and there's lots of ways you can do this, and that's a big reason that I've actually got this channel, is to kind of share my research. But there's lots of people out there that are putting in the time and the research to understand what price targets for stocks should be. So you can find some stocks out there that are trading, at $100 that might be on sale in the market, in the stock market, for $80 or $60 or $50, okay? And when you find those opportunities, if you can find a stock that you can really say, hey, I've done my own analysis, I can really hang my hat on the fact that I believe that in the next, couple years, if it's next year, next month, I don't know when it's going to happen, but I believe that this is a $100 stock and I'm buying it today at 60. And then next week, you're able to buy it for 50, provided that nothing else has changed. You should be just as excited to continue buying that stock as you were about being able to get the $100 bill at a lower cost. Now, that's a very big caveat when we start talking about this, and that's where I think a lot of people get hung up. And let's even use AMC as a recent example. So AMC, maybe let's say earlier this year, maybe your thesis was, oh, I think that we're going to have a vaccine and that's going to allow people to return back to the movie theaters, and their business ultimately is going to be successful. Well, let's say that you thought the AMC stock was actually worth $10, and you started buying it at $6 or $7. Subsequent to that, we've seen their stock has actually gone now, in the last month or so, down below $3 a share. Now, in that particular instance, you'd have to ask yourself, has something changed? And in fact, something has. So in this case, AMC, their management came out and said, we are not sure that we have enough cash to survive the rest of the year. Okay, and that's a part of a couple different things, that there isn't a vaccine that's, out in the market right now. When you also look at it, there's just a lot of reasons that people are not excited about packing into movie theaters at this point in time. Okay, so that changes things. So that means that, hey, that $10 price target that you were really kind of hanging your hat on and saying that was based on your analysis is now changed because news about the company has changed. So again, if there's nothing different about the company, I feel like you should be excited about it, okay, if you're able to get a sale on the stock. Something fundamentally changes, you can reevaluate what that price target should be, and oftentimes that might mean that you don't want to stick with it. And I'll give you an example on the positive. So there's a stock called Carriage Services. They're a funeral home. And with that company, I was a shareholder a couple of years ago. And that stock at one point, it had a day where it was down double digits. It was down like 15%. And, I was researching things about the company, and there was no press releases. There was no guidance saying that, management thought they were going to run out of cash like an AMC. There was no reason from anything that I was looking at that said that stock should have been trading at a discount, but yet I was getting it 15% off. What did I do after not finding out that there was anything wrong with the company or any additional news to lead me to change my thesis? I bought more because I, was able to say, hey, I understand what my price target is. I know how much this is worth, and I'm getting a sale on this, so I want to buy even more. Okay, so that's just a methodology I think that could potentially help some of you out there, because I know that, again, so much of being successful, as I mentioned, it's, you need to have the emotional fortitude, to be able to, be a successful investor in the long run. And I think a big way you can go about that is thinking about what's the actual value of your investment. Really know that. Don't rely on somebody else to tell you. You can rely on somebody else, including this channel, to be the source to kick off your research or to help you maybe come across a stock that you might not have heard of otherwise, or maybe it helps you to think of something that you wouldn't have thought about in a particular way. But you should ultimately be able to have an investing thesis that, is supported by your own analysis or makes sense to you, because otherwise you're going to put yourself in a position where I feel like you're just going to be, kind of running in circles, chasing different opinions, because for anybody who's ever excited about a stock, you're going to find somebody who isn't excited about a stock. For somebody who thinks that you're a genius for wanting to buy something, there's going to be somebody else who thinks that you're the biggest fool in the world for wanting to buy that particular stock. So it's like, if all you do is just kind of bounce back and forth those opinions, you're going to drive yourself nuts. But when you actually take the time to assign the value to it, you understand the value, again, you're going to put yourself in a position to have better success in the long run. And that's what I want for you. That's what I want for me. That's why I want to have this channel, so I can help you reach that goal. But anyway, thanks a lot for watching. Let me know what you guys thought about this in the comments below, and see you next video.